Christopher, welcome to F.A.C.E. How are you, buddy? Nice to meet you. Hope you have a mic.
Hey there. Hello.
Hi, Christopher. How are you?
Oh, great, great. You can hear me.
Yeah.
I'm doing great. First time I've ever used Zoom, so I wasn't sure how all this software here works.
Oh my God, Zoom is the stock is Zoom because of the virus and everyone telecommuting. So,
No doubt.
yeah. So I really appreciate you taking time during these real volatile markets and coming to talk to us. Nice to meet you. We do have a screen share here for you,
Okay.
Christopher. And if you just hover your mouse over the green share box, you'll see it on the drop-down menu.
Oh, okay. All right.
And you click that.
Click that there. Okay.
And then share your screen.
Screen there like
Beautiful.
that.
You
All
got
right.
it. See?
Fantastic.
You're not like me. They dragged me kicking and screaming into the 21st century. I'm known as low tech Dale or no tech Dale. So I understand that you trade and you teach and you use Wyckoff, or is it Wyckoff?
Wyckoff, yeah.
Okay, Wyckoff. I know a lot of people. I'm familiar with that name. It goes back to God when I started in the 70s. Okay, so I'm interested in the evolution and how people make this trading journey, and you must be too as an educator. So how did it start for you, Chris? What were you doing prior to becoming a mentor and a trader?
Well, I mean, mine started way back in the day. I like most people, I come from just a blue collar family. My dad was military, and so I kind of grew up, all over the world. And the one thing I found out, especially as I exited my teenage years, is that I really didn't like. I really didn't like being told what to do. I didn't like having somebody tell me that I had to do this and that, the other. And so that kind of told me, immediately that I wanted to do something on my own.
Okay.
Where I wouldn't have to worry about.
So you weren't interested in going into the military since you didn't like to be told what to do?
Well, growing up, most military children will tell you, most of us military brats will tell you that, we kind of grow up in that environment. So we more or less just assume that's what we're going to do.
Oh, okay.
And then we kind of, if we're lucky enough, I guess, we kind of figure, that isn't really the best thing to, potentially the best use of our resources there. But I figured that even in the even the civilian world, I didn't like the idea of having a boss, of having somebody that I had to answer to, and constantly check my my thoughts and my ideas. So for me, trading was the route that and business ownership was the way out. It was the way that I didn't have to work for somebody else.
Right. Okay. So when did you start, and did you have any mentors yourself or major influences? I'm looking at your chart setup, and you have a lot of yellow horizontal lines. So I believe you're into supply demand zones as well as FIB. So we'll get to that. But did you have a teacher, or are you self-taught?
Yeah. So what I did was, knowing that this is what I wanted to do, I figured, I can't even remember who it was back in the day, but, back about 95 or so, right as I was getting out of high school, I subscribed to it was $200 a month, I believe. And it was a one-time a month. It came in the physical mail. It was a newsletter from a guy who was a stock trader.
Do you remember?
I'm sorry?
Do you remember the name?
I cannot, I was sitting there this morning. I was like, man, I know this is going to come up. And I just, at the moment, his name escapes me.
Okay.
But that's literally where it started. And like most retail traders, I went out there and, I had this idea that trading was easy, and, I was going to make a lot of money really quick. And so after I lost a lot of money, I decided that, I didn't want to give up. I wanted to figure out how it was really done. And so that's just kind of been my ever since that time, there's been my kind of movement through this. It's just trying to always figure out, always understand the underlying why do things happen. It's not enough for me to simply understand that, if price prints this particular pattern, it might do this or this. Why is that going to happen? And that's why I kind of ended up with Wyckoff as I progressed.
Okay. So, yeah, what that was a rhetorical question because we talked about Wyckoff. So I'm interested in when you started using Wyckoff, was it a learning curve to get used to the methodology? And why don't you explain a bit about Wyckoff and this setup? What I wanted to ask you is, you got this newsletter in '95, so that tells me you were trading before crypto became popular.
Yes.
Have you made a transition and gravitated more towards crypto than other instruments?
I don't know that I'd say more so. I guess
in addition to then.
Yeah. I mean, when I
Okay.
started again, it was stocks, and then I moved on and went into options, toward the end of the 90s, beginning of 2000s. And then a few years after that, I kind of got into Forex and really enjoyed Forex. Forex is something that I enjoy quite a bit. And so, it's funny when I came into crypto back in about 3 years ago, I noticed that a lot of the bad stuff that you see in Forex, manifests itself in crypto as well. The get rich quick overnight, my system here, do these 3 things and you'll be a millionaire next week kind of thing.
Huge leverage.
High leverage.
Yeah.
And so, for me, it's a natural kind of, I guess, kind of move sideways there from Forex into crypto because there's so many similarities between the two markets.
Okay. Well, we had the first real test of crypto being kind of a hedge against risk, which it turned out not to be. Everything liquidated out during this panic, but the recovery has been quite impressive. What are you seeing here with your horizontal lines and your strategy that you teach? What's your view here?
Well, the first thing, let me go ahead and zoom out here. I mean, here's the real picture. This is kind of what we're looking at right here.
Okay.
And so I've got Coinbase up here, so it doesn't have all the previous, the other bit of, 2013, 14, all those other episodes there. But basically, what we can see here from the 2017 high up here down to the 2018 low, and then this recent low here, is basically this appears to be printing a reaccumulation trading range here. And that, that of course there swings from that almost 20,000 down to that 3,100 level there. But what I find most compelling about this, because this is a range that I actually drew up back there in February of 2018 when we had the strong move down followed by the move up. Mm-hmm. And so we get to this point here where we're at, and what we see is just a strong drop down. It hits the EQ here of this September monthly candle right here.
What's EQ stand for? Equality?
I'm sorry, the
ST?
I'm sorry?
You said it hit the EQ. What's
the
EQ?
Yeah, the middle here of this
what does EQ stand for?
There goes my brain. It just completely dropped off.
Okay. So you use something, and the definition of EQ is that a Wyckoff term?
No. That's just just the middle of this.
Okay, equidistance.
Right
okay,
here.
All right.
Yeah. So I mean, as you can see right here, it just kind of hits that right there and bounces right back up. But the big thing here is that you have this strong drop and this immediate return right back up into the trading range here.
Yeah.
And so whereas we have a lot of everybody right now, crypto Twitter and social media being what it is, everybody wants to be bearish below looking for these lows, which, while possible, if I take a look at this right here, it doesn't look very likely. Again, it's this return back into this trading range here that is really compelling to me here. But this is still the monthly candle here, so we still have to see how it closes out. But for right now,
that's one of the biggest wicks on the whole chart.
I'm sorry?
That's one of the biggest wicks
Oh yeah.
on the whole chart.
Yeah, absolutely. A huge amount in here. And so what we would usually look at with this kind of volume coming in is we kind of look at it as what we call a terminal shakeout. And the goal of the terminal shakeout basically is it's that last move down before price starts advancing bullishly. And the idea behind it is that anybody who's going to sell is scared into selling. At that point, if you're holding and you don't sell, then you're what we consider to be, you know, the strong hands, those that you want, because what you're trying to do with this trading range here is you're trying to get anybody that's going to sell short term. You want them out. You want to be able to hold on to what they have, so that way price can move up unimpeded and make these new higher highs. And so you get to this point right here where you have this spring, this terminal shakeout, and that just scares the bejesus out of the market. Everybody tried to sell, everybody getting bearish. And so not only do they get rid of what they have, but then they short, and then they get caught on the wrong end of that as price, of course, comes back up.
Yeah, you know, I mean, they really would have been able to shake out everyone if you go back to that monthly chart, if they had taken out last January's lows.
Oh, no doubt.
Like they held, you know, that would have taken everyone out of the trade.
Yeah, exactly. But, you know, again, I think the biggest problem people have when they consider Wyckoff as a trading strategy is this misunderstanding that, you know, the retail is the engine of the market. The retail kind of says, okay, you know, the market, once we get involved, we're going to kind of keep the market moving in one direction or the other. But it's these larger professional accounts that kind of nudge the market around. And so, you know, when you have things like this drop back here in November of 18, or this drop that we had here this month, you know, it's initiated and started by these, you know, these larger accounts. But at the end of the day, the follow through comes from retail.
Yeah.
And so in this case right now, so far anyway, remember, this is still a monthly candle, so anything can happen. But at this point here, retail has decided that this low right here at that 3,800 level here on Coinbase is it. That, you know, they've decided that's their buy level. And so price could not actually continue down below that January low there yet.
So what do you look for going forward? A breakout of this kind of a big continuation formation and new all-time highs? And what will you need to signal that we're there? Was this month, if we close like this, enough?
I believe so. I mean, if we zoom, I mean, just looking here at the monthly, this is an amazing candle right here. Even though, you know, even if it were to close out like this, you know, you've got supply slightly in control. But what's more telling about this candle is this lower wick here and the inability of supply to continue to control.
Okay.
And so, you know, Wyckoff is all about your relationship between price action and your volume, and not just locally, but between different parts within the trading range. And so what we see here is we see this this volume increase here, and we see this candle spread here continue to get smaller and smaller. And the more it does that, the more bullish this becomes, because you're exerting more effort down here, but you're getting less of a result if you're supply oriented. And so then what we do is we kind of zoom in here to smaller time frames. Let's pull it in here a bit.
Okay.
And so what it is if this is a, as it appears to be, a spring or terminal shakeout, then we should generally expect a pretty easy movement up and through the rest of here, kind of what we saw back over here in early 2019. We had this pretty easy movement. And so we should see pretty much the same thing as price advances through here, if this is that spring or that terminal shakeout area.
Okay.
You know, again, we did have the drop. We had the pull back up, and then we had a test here.
Yeah.
And, of course, then the volume here, much, much lower here on the test than what we had on the drop there. And that's usually what we're looking for to kind of indicate that it is a successful spring, it is a successful test, and price should be headed up.
Okay, does Wyckoff talk about shallower retracements after a spring? Like, for example, with this setup here, the fact that we had that washout low, that if we do get a correction, that perhaps all we should be looking for is maybe 38%, not 50 or 61.8, and that would be a demonstration of the relative strength of the instrument?
Yeah, it doesn't quite go into fibs and percentage retracements and whatnot.
That
But
you just added that to your.
yeah.
That's
I've
not
just got that
Wyckoff.
because with what I do with our people that I train and whatnot, and I discuss things with, my goal is to let them know that, hey, all these different ways of looking at the market, whether it's Elliott wave, whether it's Wyckoff, supply and demand structures, whatever you're doing, it all gets you to the same place if you do it correctly. And so I tend to leave a lot of different things on here so that way our members are able to decide what makes the most sense to them as they trade, and then they can kind of follow along as they're learning. So that's why you'll see often many different things on my charts.
Okay. All right. Anything else any other instrument you wanted to cover besides Bitcoin?
Well, I'll tell you what, again, right now we talk a lot about what's going on with the stock market.
Okay.
I actually published this here back in March of last year. And so being that I'm Wyckoff oriented more, than anything else, it's the whole supply and price action, volume and price action. I had been talking from about May of 2018 about this whole structure here, this sideways movement that we had, this trading range as being distribution. And I'm sure you can imagine that back in May 2018, I got a lot of funny comments. And from then, everybody wanted to be bullish. I didn't see it in the volume. I didn't see it in the price action. So then in March of 2019, I printed this here, and I kind of looked at what we were looking at structurally compared to how it looked back around 1987. We had Black Monday.
Yeah, how old were you then?
Let's see, 87. That would have made me, what was that, 13?
Okay.
13.
All right. Were you short?
I wasn't even in the market then. I knew I was, growing up in the 80s, I knew, you had all the movies of the corporate takeovers and raiders and
all that.
Gecko. So, greed is good.
Gordon Gecko was my hero.
Yeah, there you go. Exactly.
All right.
Exactly.
Okay.
So I guess my whole foray into trading probably started, had its beginnings back then, but I was not in the market obviously at that time. But nonetheless, we put this up here, and I was looking at around 30,000 on the move up. And then, of course, as we see, we got pretty close to that.
So we've taken out the megaphone lower dotted line on yours, where the S&Ps, it would come in around 1,800. But it looks like we took it out before we turned. And then you have it looks like equality under that lower megaphone line that could take it to 12,000. Is that what you're looking for?
Yeah, so right now that's kind of where I'm at with this. Let me pull up the mini, the 30 here. Not the mini.
Oh, you do Elliott too. You do everything.
Oh, yeah. I do quite a bit of a lot.
All right.
Getting in there, but yeah. So let me go and pull up. Oops. Let me pull up a better chart here. I've got a little bit more time frame on here. So this is what if we look at the 2000s here, this is basically just reaccumulation. So you had your dot-com bubble, your dot-com crash, you had your 2008 financial crisis, creates this spring down here into the 2009 lows there in March.
Right.
And then we have this big move up from that. And so, again, when we're looking at this, now that we're taking out this local kind of reaccumulation range from 2016, that gives us our first bounce. And the way I'm looking at this right now is basically I've got this A wave coming down. If this follows through, as I've been talking about for the past year and a half, I expect the B wave back up toward the bottom of the trading range to get rejected.
Do you have this in S&P terms?
I'm sorry?
Do you have this in S&P terms? I think more people trade SPX than Dow because of the different products, the minis and the micros. Okay.
Yeah, there we go.
All right.
Go ahead and pull this in here a little bit. There we go. Again, same idea. Let me see. Oh, I don't have anything. It looks like I lost it. Having a little issue with TradingView the last couple of days, but really enjoy the platform.
So you think we could recover back to about 2,800? Is that back to S1 or something like that?
Yeah, so what we're going to look at right here is we've got this local trading range again back here for 2018 till now. Zoom in back there. And so the bottom of that, usually what you're going to have, if this being distribution here, which is clearly what it appears to be with here, what you'll usually have is you'll have a return back up to the bottom of this trading range, maybe a little bit into it here, and price gets rejected there, and then it comes back down, and that's the markdown. Then, so you're looking about this move potentially up here to around 25, 2600 maybe.
We almost got there. We got to 2,500 last night.
Oh yeah, I see that right there. Yeah, exactly. So again, it might head up a little bit higher, but basically what you're looking for is you're looking for weakness as we get up into this trading range here, and you're looking for a solid rejection that kind of sends it back down, and that's your kind of your kiss of death right there.
Could it get to the upper yellow line?
It shouldn't. If it does, I would be very, very cautious about any downside on that. Because I'm sorry?
Why?
Because if this is distribution here, then you should expect that the bottom end of this trading range holds as resistance. If it's pushing up through that, then what it's telling you is there's not enough supply coming in here. Supply has been worn out here. And if supply is worn out here, there's nothing to keep it from going up higher there. Is really the idea.
So you don't think we could correct 50% or 61.8 of this decline? It looks like you're looking at maybe 38% at that first yellow line.
Let me see here. If we look at this here, yeah, that gives you a 50% right there. Yeah, I would be looking at if we're looking at fibs here, I would expect a max of that 38.2 right
26.440. Okay.
Yeah.
I have a lot of confluence there. All right.
Yeah, exactly. I would get really suspect anything popping back up over the mid range here of this trading range.
Would suspect include being open to the possibility of a new high?
All right, glad you asked that because that's the other part of what I'm looking at here. So when I published this, within a few months after that, I was already discussing the possibility that what we are seeing here could be a wave 4 and how that would play out. And so I went ahead and updated with this idea. Finally, I was talking about it long ahead, and then in December, I went ahead and published it. The idea that we've got an ABC, 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 and then we'd have an ABC down here for E.
And then it goes back to the top of the megaphone.
Yeah, exactly.
A broadening formation will drive people bananas, won't it?
It would. And, this inverse, this megaphone pattern, this inverse symmetrical triangle, it's pretty rare compared to what we usually find as far as patterns go. And so, I leave this open as a possibility, but when I look at it, my big issue with it is this strong
the velocity.
Yeah, you went from way up over here.
Yeah, wiped out 4 years of gains in 3 weeks.
Yeah, exactly. And so while I do still leave that open as a possibility, and as I've told our members, don't necessarily count it out. I still lean toward that further down. Now, why would this happen fundamentally? Well, we've already got the Fed doing what what it needs to do. It's providing liquidity. Hey, unlimited asset purchases, 0% interest, all these things. And so what we need to see now is we just need to see, this drop right here is fear. If you look, it's fear of the unknown.
Yeah.
And so if what's going on with the coronavirus becomes known, if we come up with some kind of vaccine, some kind of effective treatment, some kind of, the peak of cases is hit and we start backing off of that, all that stuff adds up to the second thing we would need, in addition to that Fed easing, that could potentially lead to this continuing up. And so I'm definitely open to the possibility, but it's one of those things where it has to prove that it's going to do that because my default position is this further downside.
Okay. And I like that yellow line. I actually had that 1550 level was big between 2000 and 2007. Look at that. That was a major breakout.
Exactly.
Yeah.
And without a retest of it, it makes a lot of sense to come back and retest it. So
yeah, I tell you what a great guest you are, Chris, and I can learn from you. We can learn from everyone. So I've been doing this a few months. So, what's the best way for people to follow you, get involved with you? If you'd like to show your website, that would be fine right now, if you want to do that.
Sure, sure. We run a website here, howtotradetowin.com. And this is our basically, your way to get involved with us. We provide a lot of information via Discord.
Okay.
And we do have I have an educational video series where basically we start with how the market works and why, market psychology, and then into how to properly use indicators and price action patterns and whatnot. And then we move into Wyckoff, and I'll have an Elliott Wave series up soon as well. And you kind of get access to all of that by joining us through here. But people can also follow me on YouTube at Texas West Capital on YouTube.
Okay.
As well as on Twitter at TX West Capital.
Okay. And let me guess, you're located in Texas.
I am. San Antonio. Yes, sir.
Trinity University and the Riverwalk.
Riverwalk, which is actually pretty empty right now.
Yeah. Let me, before we say goodbye, what is your take on this pandemic that, it's like 100 years ago we experienced something like this? What are your thoughts as far as, there are a couple of sides, do we risk people's lives or do we save the economy, which could also cost people lives if we don't save it? What do you think is going to be just a guess and your intuition of how this plays out? Any ideas?
Right now, I guess my biggest concern of it all is, with my educational history, it's all about government, really. And the one thing we know is government, uses every opportunity to take into itself more power. And so, I'm fearful that what we're going to see is these calls for more power, emergency powers right now, leading into, things that they don't let go of in the future. But how do you deal with this? I mean, at the end of the day, I can understand people. I'm very much anti-big government myself, but I also understand that, people are going to be stupid and they're going to get out there and they're going to hang out. I mean, Florida beaches recently, Bondi Beach in Australia being another thing. People just don't know when to stop. And you've got to, as a government, you got to, kind of step in there. Unfortunately, it's one of the things you have to do and say, listen, you got to stop. So, for instance, here in San Antonio, we've got, we went into lockdown last night.
Is it being enforced or is just a stay-at-home order?
Oh, no, it's going to be enforced. The police are going to be kind of pulling you over and whatnot if you're out and about, making sure that you're allowed to be out and about.
Okay.
But supposedly, I'm not sure how much that's going to be enforced because, they say essential travel, so grocery store or hospital or whatnot. But, so where's this going to go? I don't know.
I don't know.
I really don't know. The sooner we get this done, the better. But until we do everything, I think the government's doing right. You've got to address the market stuff.
Yeah.
But, a lot of damage has already been done. A lot of people are out of work. A lot of people being laid off. A lot of businesses going out of business already.
Yeah, I don't think that traders and trading educators are included in the rescue plan. So I don't know about you, Christopher. I'm not going to hold my breath for a check. I'm going to have to scalp it to make it. What do you think?
That's right. That's right. Exactly. But thankfully, it's a good skill. It's a fantastic skill to have.
Yeah.
It really kind of sets you up for times like this.
What a great interview. I'd like to have you back, Christopher, and like it or not, you're now my trading warrior brother.
Well, I appreciate it.
Yeah, and I really do. I got some great looks, and thank you for edifying our F.A.C.E community today. And you and your loved ones remain untouched and keep passing it forward and teaching people how to fish, buddy.
That sounds great, man. You take care. Thank you so much.
All right, everyone. That's Christopher Inks. You can follow him on Twitter at TX West Capital. And we'll see everyone tomorrow. Following up on Bitcoin, we're going to have at Crypto PhD, Demelza will be with us. So everyone have a great day. Stay safe. I hope that you and your families remain untouched. and we'll see you tomorrow. And don't just count your, I don't know, anything. Count your blessings. Talk to you later.